guys, it's Arielle here from Fix My Books, and today we are joined by a very special guest named Michael. So, Michael, please introduce yourself.
Hi, Ariel. It's a pleasure to join you today. A little bit about myself. I don't want to bore your listeners too much, but basically, I've been an accountant, full CPA, CA for 15 years now. I was working for a accounting firm previous to starting my own for about 7, 8 years. They had about 15 to 20 CPAs on staff. I really got a grip of like learning about small business because it was a smaller accounting firm as opposed to working for a big firm. So I really learned, how to look at corporations in a big picture instead of just one little aspect of that corporation, or tax planning for that matter. So yeah, I did that for about 8 years, and then I decided to branch out into my own business. Me and a business partner, we started an accounting firm called SMP LLP, and we're a fully licensed CPA firm in Ontario. We are able to do audits, reviews, compilations, tax planning, the whole realm of any accounting needs that a business or individual may need from an accountant. And yeah, that's kind of the short spiel about me.
Awesome. So, what types of businesses do you typically service, like in terms of size or like industry? Is there like a minimum, they must earn at least, this much per year for you to be able to service them? Do you have anything like that?
Yeah, that's a great question. Now, for me, in terms of the small end, I will never turn someone away just because they're small. I find that I like to grow with my clients, especially because, even though I've been doing my own business for about 7 years now, I find that I'm still in the growth stage. So I will never turn down a company that is growing. But really, if I'm giving you just like a numbers wise, I would say my smallest client is, from $0 to $100,000, and my largest client is a group of companies that has over 100 million in sales. So I'm kind of in that small medium bracket of accounting clients.
Okay. And what industries do you typically work in, or are your clients in?
Being in Ontario and being of Italian descent, I typically have let's say a connection with a lot of construction businesses. So that is, I would say, my bigger clientele, but I do a wide range. I do, let's say manufacturing, wholesaling, water treatment, restaurants, and bar. The list goes on. I do some tech, some banking as well. So it's quite the wide range, as you would expect, servicing small clients. That's kind of what you get. You get all walks of life.
Cool. So now that we know like what industries Michael serves, this is one thing that I actually want to ask Michael. So Michael, why did you decide to, start your business instead of, working for someone else?
That's a great question, Ariel. The main reason was because I always had an itch to be a business owner. And that's partially the reason why out of university, I didn't want to go the big firm route. I wanted to go small firm to get that, wide ranging grasp of accounting as opposed to just like one little aspect of it so that I could start my own business. So that was the main reason. And I also like the freedom, not like, don't get me wrong, there's probably less freedom as a business owner, as you can attest to, but there's just something in it that we get to set our own time that gives me that pride and I guess content.
You mean like the
in life.
Flexibility? Okay.
It's a little flexibility, even though there really isn't that much flexibility, as you know. But it's basically just in my head, I think I have flexibility. So that allows me to go on with being that business owner.
Okay. So were you like growing up, did you have like family members that were business owners or like maybe family friends that were business owners? So you were kind of exposed to the small business world?
Absolutely. I had
Hmm.
a lot of family and friends that owned, or friends' families, I should say, that
Hmm.
owned businesses that, were very successful. And I always looked up to them as opposed
Hmm.
to the individual that is, working for somebody, not to take anything away, because, my father did that and many
Hmm.
other people I look up to did that as well. But it was always something that intrigued me more if someone owned their own business and I saw that they were most of the time more financially successful than the person that worked
Hmm.
for a company. So that kind of led me into that direction.
Okay, awesome. So, Michael, as a business owner, okay, what are the top three lessons that you've learned or you wish you knew in the beginning when you had your business?
Okay, well, I learned this from my old boss, that
Hmm.
you always want to treat your clients, give them a great service, and give them a fair price. And this gentleman was highly successful, the CPA that trained me, in doing that, exactly that, always treated everybody fairly. And I know that sounds cliche, but I would say
Hmm.
that that has been like the backbone of my business, is that I, offer a great service and a reasonable price.
Hmm.
So that would be the number one. The number two that I'm learning now more so because I'm starting to hire people
Hmm.
is to hire and also retain
Hmm.
some top talent. And it's easier said than done, especially in this world, but
Hmm.
that is like very crucial to maintaining, the continuity of a business. And then
Hmm.
the third one that I am, that we're both obviously experiencing with the rapid change of everything
Hmm.
is, using the best programs that are available on the market to, a cut time, in doing some of the tasks that we do in the accounting world, and also staying organized, because I feel like in the old days of accounting, they used to have a team of 15 people working on a file that we now do with one person or maybe two. So it can be very overwhelming, and that's why we need to stay up to date with the best programming. So
Hmm.
that's kind of my top three. It's
Hmm.
somewhat adapting, I would say. My number one and two is will
Yeah.
never change, but maybe with three, it might change over time, depending on
Hmm.
where technology takes us.
Okay, awesome. Yeah, as someone, who works virtually, definitely like staying on top of whatever the latest softwares are would be a very big priority because you don't want to be left behind in terms of what you can offer your clients as well, right? If other firms are like starting to offer, different types of services, then you want to make sure that you can step up to the plate and offer your clients the same kind of service. You don't want them, leaving or like looking around saying, "Oh, how come this other, accounting firm offers this but you don't?" So that's definitely something that you need to stay on top of as a business owner. Okay, guys, so here is one of our top requested questions. What is a holdco or holding company? And Michael is here to help explain this to us. So, Michael, please treat me as a business owner who has no idea when it comes to holdcos, because that's exactly what I am in terms of this situation. Not just like a bookkeeper, but also a business owner, and I've heard this term a lot, but I haven't really dealt with it or done much in terms of this industry or this space. So please explain it to me like I'm a 5-year old.
Sure, I will do my best. Okay, so there are two terms that you typically hear um, an accountant talk about when it comes to a company. The first would be an operating company, which is obvious.
Hmm.
It's operating. If you're, let's say, a butcher and you have a storefront, all the operations of that butcher company would be reflected in the operating company. Now, a holding company is something that is set up usually later down the road. It's sometimes is set up initially, but most of the time it's, done for a more established business. And that is set up for the reason of holding all the assets that this operating company has, let's say, grown and established over its time. And some of those assets that a holding company could hold are, the first thing is shares in the operating company. So you would own common shares of your operating company in your holding company, as opposed to, let's say, Arielle owning her shares individually in her name, of her operating company. You would own it in Arielle Holdings. That's kind of the basics of the first thing that a holding company would hold. The second thing is obviously cash that has been saved over time. A lot of the time there is real estate in there, because if you're to use that butcher example, if you have operated a storefront for many years, chances are, if you're lucky, you bought the property that you were operating in, and you now hold that property in your holding company. And again, there's many other assets and holdings that will be found in a holding company. But to keep things very simple and easy for this discussion, I would say that's the typical stuff that you would find being held there.
Okay, so I mean, who is this for? Like, in terms of holdcos, is this something only for like billionaires, or can like an average person just like open one? You know what I mean?
Well, it's definitely not for billionaires, because I don't have any billionaire clients, Arielle. So I will say that. But it is, I would say, so listen, to give you the whole spiel, is holding companies can be set up even if you're at stage 0 of your business. And I find a lot of the times, if someone goes to, let's say, a big firm and asks for a corporate structure, the big firm is going to give them the Ferrari of tax planning from ground zero. They're going to give them the family trust. They're going to give, I don't even want to get into that, because it's probably beyond where we're at this stage of the podcast. But my point is you don't have to be ultra established to have a holding company. It's literally just another company that you incorporate, and it stands above your operating company. Now, in my experience, and what I usually tell my clients, for the sake of cost savings, especially if, the dollars mean something to you and you're not that billionaire or 100 millionaire, you want to, save as much money as you can and invest it in your company and not pay, accountants and lawyers. You don't necessarily want to have a holding company from day one, because chances are you don't really have many assets to hold in your operating company at that stage. You're running a very tight ship. Your cash is probably just enough to, make the monthly payments for next month, and you don't really own any investments or real estate in that company. So at that stage, you don't necessarily need a holding company set up. When I do tell my clients to set something up is when that operating company that I was referring to earlier has, accumulated a lot of, well, and I shouldn't say a lot of wealth, but some wealth that you don't want to expose to creditors.
Okay. So let's say, again, like the butcher, for example, and the butcher owns the property of where the shop is now. So you're saying you want to move the real estate, right, into the holdco. So should anything happen to the butcher, let's say someone goes in the shop, slips and falls and whatever, and they get sued, that the real estate is not included in what's being sued. Did I get that correctly?
That is a very good reason. Liability is definitely a huge factor when considering a holding company. So basically, in the example that Arielle gave, if you do own, let's say, a building, and we're based in Ontario, so the buildings are pretty expensive over here. If someone did get injured, or let's say the butcher served a bad piece of meat by accident and someone got, gravely sick, your company is at risk of being sued and exposed to the losses of that suit.
Yeah.
And if the majority of your wealth is held in a real estate asset that is in that same company, that butcher company, then all
Mhm.
of a sudden that real estate is at play. And someone that sues your company can basically take the wealth from that real estate.
Mhm.
So a lot of the times when I'm having that discussion with people,
Mhm.
when to set up a holding company is when they've accumulated that wealth and you want to protect that wealth from any
Mhm.
accidents that may happen in your operating company. That's the time to transfer it to a holdco.
Okay. So there isn't really like a flat dollar value. Let's say once you hit $1 million, you need the hold go. It really depends on the situation.
Exactly. And I mean, I would say $1 million is probably too late because I don't think
Mhm.
anyone would want to lose $1 million to a lawsuit. I,
True,
I,
true.
especially if it took you, 20 years to accumulate or even longer sometimes.
Yeah.
You wouldn't want to wait till that point, but you want to wait to the point that your business is turning a steady profit every year. At
Mhm.
least in my, if we're talking about how I'm trying to advise clients to save money as
Mhm.
well, that has started as an individual owner.
Mhm.
Um, yeah, you want to wait till your business is generating profits every year after paying yourself a wage,
Mhm.
and you're left over with, let's say 100, $200,000 every year in profits that's slowly
Mhm.
accumulating in the company. That's the
Mhm.
time that a holding company is worthwhile to set up.
Awesome. Good to know because we don't want to push people into these hold costs anyways and like they'll just get hit with, accounting fees and other fees for compliance and then that basically eats up all the cash they were going to put in the hold go anyway. So you do need to reach kind of a certain, I wouldn't say size, but a certain point in your business before you even start talking about these things. So like doing this too early could just cost you, sorry, like more money in the long run.
Absolutely.
Okay, awesome. So can you explain what the difference is of like a hold go to a normal corporation? Like, is it just like a normal corporation structured in a different way, or is it like a totally different type of corporation?
So that's a good question as well. Basically, an incorporation is an incorporation. There is no difference between any incorporation. The term holding company is more so where that corporation is in your organizational chart. So a operating company, like I mentioned earlier, that is where you
Mm-hmm.
hold obviously your operations of your main business. Um,
Mm-hmm.
that will be at the bottom of the organizational chart. In most
Mm-hmm.
instances where the operating company is just owned by the owner operator, there is a level up where the owner operator owns, let's say, 100 common shares of that corporation and they control it fully. When we introduce the holding company level, that is an incorporation as well. It's the same structure legally as the operating company in terms of all the laws that govern it, the rules for taxes, all of that. There's nothing different for a
Mm-hmm.
holding company as opposed to an operating company. It's more so just how we structured it. So, in the sense of a holding company, it is going to sit above your operating company. It is going to own all the common shares of your operating company. And it will
Mm-hmm.
also own, let's say, some assets. Now, you brought up a good question. Is it taxed differently than an operating company? It's not necessarily taxed differently, but the assets that it owns can produce different tax rates than an operating company. And I don't know if you want to get into that now, Arielle, or not, but
Mm-hmm.
if we're talking about just corporate income taxes on a very
Mm-hmm.
basic level, most of the time, if you're a small business, you experience a tax rate of, let's say, now it's about 11% is your
Mm-hmm.
small business tax rate. Um, if you're in a holding company and you own investments that produce investment income, you don't get to experience that 11%. You experience a much higher tax rate. It and it's a pretty complicated calculation because there's a whole lot involved. But when it's
Mm-hmm.
all said and done, what the way I break it down to my clients is you're paying about 27% tax on that investment income. And there's a lot of
Wow.
rules. Yes.
So it's not necessarily, I wouldn't say it's like you would open up a hold code just for tax savings. It's not really that. It's more for asset protection.
Exactly, but there is definitely a tax savings portion to it. And
Mm-hmm.
the main reason, and I'll tell you this now, I don't know if it's the right time in our talks, but
Mm-hmm.
I feel like we're naturally getting to this point anyways. Um, so basically, the way that the dividend system works is typically, if we're using that butcher example again, and the butcher starts
Mm-hmm.
making, let's say 100, $200,000 a year in profit after paying
Mm-hmm.
himself, his workers, all that stuff. Um,
Mm-hmm.
if he needs to get, or she, if they need to get
Mm-hmm.
access of from that money, if they need access for that
Mm-hmm.
profit, and let's say want to invest in stocks or real estate,
Mm-hmm.
without the holdco structure, they would have to pull the money out of the company, and they would pull out the money by either a dividend or a wage. That
Mm-hmm.
is obviously taxed at a high rate, because if you're already
Yes.
earning a salary of, let's say, $100,000, you're getting taxed in the high percentages, in between 30 and 50%, depending on how we structure the withdrawal. So
Yeah.
imagine trying to invest in something where you're already losing 50% of your money to taxes. It's not a good investment. So
Yeah.
what a lot of times too happens is people set up holding companies and are able to dividend all these retained profits from their operating company into this holding company, and
Yeah.
it allows them to retain that money tax free. So there's $0 in taxes on those dividends because it is an intercorporate
Oh.
dividend.
I get what you're saying. I get it now. I think you explained that really well. Is there any other thing, in terms of basics with holdcos that people should know before trying to start one, or like um anything that most people might not know about holdcos that is like something to important to know actually?
Well, I would say that, the liability side of a holdco is not guaranteed. Okay. Now you hear this a lot, even if you Google it online.
What do you mean liability side? Like director's liability? Like if
That's
the
exactly where I'm leading to.
okay.
So some people may think that if you have a holding company set up, that you are untouchable. All the money that you have there is,
Mm-hmm.
free and clear. But there are
Mm-hmm.
certain situations where, if there's fraud or if there's wrongful causes, that you're not necessarily protected, pushing the
Mm-hmm.
money into the holdco. So I don't want to say that it is completely a tax shield or a liability shield to all your
Mm-hmm.
wealth. If you operate your business in a trustworthy manner, then
Mm-hmm.
most likely it will be. Now, another
Okay.
aspect of a holding company that I would say may, let's say, confuse, or I shouldn't say confuse, I should say more so complicate, is
Mm-hmm.
with financing. Now, when you're investing in real estate and other things that require financing, it is typically more difficult to obtain financing when using a holding company as opposed to using yourself individually. So that
Mm-hmm.
those are I would say the two things that, maybe for people that are new to looking into this holding company structure to consider.
Mm-hmm. So when you say about difficulty in financing, is it that just that versus the individual, or it's more difficult to get financing with the holdco versus an opco?
Well,
Or
so okay,
is it the
so
same?
that's a great question. So I'm more so referring to, let's say, for example, you already own a house and you're looking at an investment property. If you were to
Okay.
buy that investment property in your name personally,
Mm-hmm.
you have your wage, you have, let's say, a potential rent roll, and the
Mm-hmm.
banks are a lot more comfortable lending to you individually as opposed
Mm-hmm.
to a corporation. And the reason for that is it's two separate wings of a bank. With a individual, you're dealing with the mortgage department. With a company, you're
Okay.
dealing with commercial lending. Commercial lending,
Oh, I get
com-
it. I get what you mean.
yeah, so commercial lending has a whole different way of looking at financing real estate and other ventures like land and that sort of thing. So it does add a layer of difficulty. You may even be
Mhm.
forced to up your reporting standards from, let's say, if you have an operating company and you're doing a compilation or a notice to reader that
Mhm.
costs, if people are familiar with that, it costs uh, the lowest level of accounting fees you can charge for a corporate
Mhm.
year end. But
Yeah.
when you're working with a bank to get financing on an investment, sometimes they'll make you up the reporting to, let's say, a review or even an audit, and those are
Mhm.
audited financials or reviewed financial statements, and
Yeah.
those will add a lot more accounting costs to
Mhm.
uh, to achieve this financing.
Oh, okay. That makes sense since it's kind of harder to chase after hold goals compared to a person individually should they default on the loan or something. I think that might have something to do with it as well, right? Like in terms of
Yes,
compliance with the financing.
you're absolutely right. Yes, again, and again, like if you're a small business, chances are the bank will have a personal guarantee with you anyways, so they can
Mhm.
come after you and your corporation. But you're right, it just adds another layer of complexity for the banks. So
Mhm.
typically, they make it more challenging to get that financing in a
Mhm.
corporation as opposed to individually.
Okay, awesome. And now that we know what holdcos do and what they're for, is there any red flags that will be raised with the CRA if someone does start a holdco? Is it looked upon, unfavorably? Or does the CRA treat it just like any normal corporation? Or the moment they see it, they think, oh, this person has a holdco, they must be, hiding millions of dollars in there or something like that.
That's a great question too, Ariel. I would say that there aren't any red flags. There are a few things that you have to make sure are done properly. And I used the example earlier about a dividend. When you declare a dividend in your operating company to your holding company, there is some reporting to the CRA on the tax returns of that dividend, and you have to make sure that you're reporting it right. So
Mhm.
it doesn't necessarily raise a flag just by having a holding company. I would say that
Mhm.
there's more complexity to preparing the tax returns in the year ends.
Mhm.
That if you don't have someone that knows what they're doing, uh, preparing your books for you,
Mhm.
then it can lead to a lot more problems.
Mhm.
That's what I would say in terms of red flags.
Oh. Okay, so you're saying if someone who is not familiar with how holdcos are structured or how to file their tax returns, that's they're more likely to maybe make some errors with it, and the error is what will cause the red flag.
That's exactly what I'm saying.
Okay, perfect. So what are some do's and don'ts when it comes to holdcos? Can I have 10 holdcos or maybe just like one holdco that owns like, 10 corporations in it? What are some best practices basically for, owning a holdco? What are some things maybe you shouldn't put in there at all? And are there some things you're not allowed to put into a holdco?
Okay, that's a great question. So I find just out of my own client base that typically when people have a corporation, they don't like to deal with, let's say, lawyers again. So if they
Mhm.
have another business idea, like just the other day, I had a client come to me and say they have a company that holds some land, and we were actually going to
Mhm.
use this as their holding company in a new company that we're creating. Um,
Mhm.
and this person at the same time has a wife that wanted to start a business venture and proposed to me that she start the venture in this holding company, right? Because it's like you don't want to deal with a lawyer to get a new corporation. You don't want to mix maybe your operating company and have two streams of operations. So they
Mm-hmm.
have a holding company set up already. Why can't we just use this to do some, let's say, management consulting work? And I would say
Okay.
that's probably the biggest no. That's a big red flag for me, because
Mm-hmm.
the whole point of us setting up the holdco in the first place is so that we
Mm-hmm.
eliminate all operations. Anytime you
Mm-hmm.
have an active business, so like a management consulting, even though it
Mm-hmm.
seems harmless, that's
Yeah.
still somewhat of an active business being operated in your holding company. So that, I
Mm-hmm.
would say, is one area that you don't want to venture on. If you do have an active business idea, you don't want to
Mm-hmm.
run that in your holding company. You want to keep your holding company strictly to holding, your assets that you've accumulated over the years.
Mm-hmm. Okay. Awesome. Um, can you turn a normal corporation into a holdco? Let's say I have an existing corporation and then I'm like, okay, now I'm thinking about doing a holdco. Can we just use my corporation to be the holdco, or would it be better to incorporate a whole new corporation and make that the holdco and then keep, the first corporation as the opco?
Mm-hmm. So I would say that lawyers do not like that. The
Okay.
reason being, the reason being is, number one, you're cutting into their fees. But number two, and more importantly, that was kind of a lighthearted response in the number one.
Mm-hmm.
But number two is, if you have a company that exists, there are chances that there is exposure to that company, whether it is tax exposure,
Oh.
or let's say a lawsuit that maybe someone forgot about that is still in the courts, or maybe a lawsuit that is in the making on some activity that happened a few years ago that we don't know about.
Mm-hmm.
So if we use
Yeah.
this company all of a sudden that has been operating and turn it into a holding company, there's that risk that something pops up out of the woods and all of a sudden, puts your hard-earned dollars at risk. So that is one reason why lawyers don't like it. Now,
Mm-hmm.
if you have something that has been dormant for many years, let's say you have a company that has been dormant for many years, and
Mm-hmm.
you are 100% certain that there's no risk of any, you know, tax that pops up or lawsuits or that sort of thing, then
Mm-hmm.
just me and my common sense approach, I would say that could be used as a holding company. And it does
Mm-hmm.
make the process a lot easier to set up.
Okay. And how long does it typically take to set up a hold go? Like, does it take, 2 weeks, 3 months? Just like give us a timeline. So, like, what can people expect? If I wanted to like open a hold go today, can I have one today, or are there other things that I have to wait for before I can have my hold co?
Okay. So in terms of just the actual creation of the corporation, it could happen
Mm-hmm.
in a day, depending on how fast your lawyer will work for you.
Mm-hmm.
It's not very difficult to set up a corporation. Now, that being
Okay.
said, when you have to do, let's say, some form of restructuring that involves, let's say, a rollover, and I'm sure sometimes people
Mm-hmm.
hear that term thrown out there, that can be a little bit more time consuming.
Mm-hmm.
And, there's a few, let's say, hurdles that have to be crossed before you can turn
Mm-hmm.
it into a holdco.
Okay.
So I mean, to get like in the example that you used previously, where we're using an existing company and then maybe
Mm-hmm.
incorporating a new business as the operating company, that holdco
Mm-hmm.
can be set up immediately. That's already set up as a holdco. Now, if you
Mm-hmm.
have an operating company and you create a new corporation that will have to turn into your holding company, there's a few steps
Mm-hmm.
involved. Typically, I mean, if everybody's out of busy season and everybody's working at full capacity, I could see it
Mm-hmm.
being turned over in, let's say, 2 weeks
Mm-hmm.
to a month. Sometimes I've
Okay.
seen it dragged on longer to 2 to 3 months, depending on how busy the lawyers are.
Mm-hmm. Okay. And when it comes to the hold co, um, so does it take longer when there are more assets to transfer? Is that where the holdup is? Because you need like, legal documents to transfer the assets, like the rollover you mentioned. Is that where like kind of the bottleneck is in terms of creating a holdco?
Absolutely, yeah. So in the best case scenario, the only assets that we're transferring are, let's say, shares, like common shares that you hold in your operating company. That is the best case scenario. There are times
Mm-hmm.
that people have real estate and maybe want to restructure their entire
Mm-hmm.
corporate situation. Let's
Mm-hmm.
say there's a family that decides to break apart or that sort of thing. There's a lot more division of assets, and it can create a lot more backlog in how long it takes.
Mm-hmm.
So, in the simplest manner, when it's just like a share rollover, that's the shortest and best case scenario. When we're dealing with real estate and other things that have to be transferred out, it gets a whole lot uglier and messier.
Okay, got it. Okay, so can you give us kind of an idea of like a price range of how much would it cost to start a hold co? Um, and how much does a hold co cost to maintain per year? I know we spoke about, obviously when you have a hold co, you have higher accounting fees because there's more compliance. What just like a price range so people have a general idea, okay, this is kind of the price that they should be looking at. And anything that's way cheaper than this, they should, think twice, if it's going to be done correctly.
Yes. And I apologize if you can hear that background noise because there's an air show that there's planes flying over my head right now. So I apologize for that if you
No
can hear it.
worries.
But to
I
answer
can't.
your
I
question,
can't.
okay, great. So in terms of cost, to set up a new corporation, I'm not a lawyer, but what I've seen traditionally, it will cost anywhere between, let's say, $1,500 and $3,000 just for the incorporation costs alone.
Hmm.
Um, and that obviously varies or varies based on the amount of restructuring that has to be done and how detailed the articles are. So if it's a
Okay.
very bare bones article of incorporation, there's not many share classes being created and that sort of thing. It's usually on the lower end. And then when we're
Hmm.
creating a lot of share classes and different rules of that incorporation, it can cost more. So that's just the bare bones initial cost. Then when you're
Hmm.
dealing with, let's say, restructuring where you have to do a rollover and that sort of thing,
Hmm.
it can vary pretty widely, but
Hmm.
I always advise my clients that just expect in and around the $10,000 bill with legal and accounting. And I know that sounds
Hmm.
expensive, but there are
Hmm.
businesses that are more mature. And, you know, to me, $10,000, obviously it's a lot of money, but if you're sitting
Hmm.
on a couple $100,000 or even $1 million of cash
Hmm.
sitting in your operating company, think of it almost like an insurance policy. So it costs 10,000. Yes, it's painful, but it's
Hmm.
1% of your holdings and you pay insurance for other areas. So this to me is like a one-time insurance cost to you to protect your assets.
Hmm.
And then in terms of maintaining that holding company, that can vary as well. If you go to, a like let's say a non-CA or any sort of firm that just puts out very poor work, you can save a
Hmm.
lot of money on a year end. And I've seen, prices as low as, let's say, even $1,000. I would not advise that.
Wow.
I know it sounds crazy, but
Hmm.
that's what I have seen when you get people that don't really know what they're doing. They
Hmm.
really undercut the market. Um, but again, when you have a hold co, there's levels of complexity that I wouldn't want to go to one of those places. And usually, when people are at the stage of a hold co, they realize the value of having a good accountant on their
Yeah.
team. So they're not going to pay that level. I'm just throwing it out there for people that don't know anything right now.
Yeah.
But if you're going with, let's say, a professional accountant, fully
Hmm.
licensed, that sort of thing, you're looking in a range of like $2,500 to $3,500 a year
Hmm.
to upkeep that holding company.
Mhm. Okay, I mean that sounds reasonable. I mean, especially if you're saying, real estate assets are in there, which we know in Ontario starts at the millions of dollars.
Mhm.
Um, that would definitely be well worth it to protect those assets.
1000%.
Okay, awesome. And then now let's get to another topic that I think everyone wants to hear about. What the heck is the difference between a holdco and a family trust? I know we touched on this like a while ago, and you mentioned that maybe we don't know if we have enough time to cover this, but we're in it now. And I always hear these two terms, and sometimes I kind of hear them used interchangeably. Like, is that, are they interchangeable? Is there a difference between, the two of them? Like high level overview. If you could give us, again, a high level overview and like explain it to us like we're 5 years old.
For sure. So a trust is completely different than a corporation. A corporation lives indefinitely until you dissolve it. A
Hmm.
trust has a lifespan of 21 years or slightly less, depending on if you want to dissolve it or not. And the
Hmm.
tax structures, returns, how they're treated are completely different. I would
Hmm.
almost view a trust as an individual if we're talking
Hmm.
very simplistically. A trust will typically have beneficiaries. You may have heard that term before. And those
Hmm.
are people that are beneficial owners of the trust. So any assets that a trust holds, there will be people that are beneficial owners of those assets. And that's what you
Hmm.
typically are called as a beneficiary. There's
Hmm.
also a trustee that is basically the CEO of the trust, and they have all control of what to do with those assets. A trust typically has a will or some form of a mandate that directs the trustee and how to distribute those funds. It's not like a trustee can go rogue and not pay any of the beneficiaries. There's typically rules involved as to how the
Hmm.
trustee can go about distributing assets. But a trustee will be on, let's say, the bank account. So they'll be able to do the day-to-day maintenance of that trust. And
Okay.
in terms of, are they different,
Hmm.
or can they be used interchangeably? I would say
Hmm.
that there are frequent tax plans, and especially this was something I mentioned earlier that
Hmm.
um, big firms will typically give you the Ferrari of tax plans, and
Hmm.
that usually involves a family trust. And the reason they do that is if you ever, let's say, sell let's say a piece of real estate or a company shares and it generates a capital gain, you're allowed to divide that capital gain over the beneficiaries of the trust. And that's
Hmm.
why people will have a family trust in place, because it allows you to divide the taxes, and typically it leads to lower tax rates because instead of one person getting all the gain, you're splitting it amongst maybe yourself, your husband, your kids, and
Hmm.
your parents maybe. So
Hmm.
you're, instead of one person getting taxed, you're dividing it by six. And that's usually, to keep it as simple as that, that's
Hmm.
usually why family trusts are created.
Oh, okay. So basically, their similarities is they are both like corporations or like vehicles to minimize your tax liabilities. Is that correct?
I would say yes.
Mm-hmm.
Corporations, if you're operating in a corporation, you're paying only 11% corporate tax. If you're
Mm-hmm.
operating as Arielle individually, you're paying your
Mm-hmm.
personal tax rate, right? So
Yeah.
obviously there's going to be tax savings there. Then with the holding company, again, if you're paying a dividend to your holding company, that dividend is tax
Mm-hmm.
free. So there's a tax savings in that end. When you're dealing with a
Mm-hmm.
trust, the tax savings is more so dividing those things into the beneficiaries of the trust. That's where the tax savings come. It's not like a trust has a better tax rate. In fact, if you retain assets in a trust that get taxed inside the trust,
Mhm.
typically it's one of the highest tax rates in Canada. So
Oh.
you never want to really retain those assets in the trust. And, or
Mhm.
I shouldn't say assets, the gains on those assets in the trust,
Mhm.
you typically want to divide those out. Otherwise, there's a big tax penalty on that.
Oh. Okay. So typically when you do, tax planning, would you suggest or would a holdco and a family trust be used simultaneously to, help one another, or is it you just have a holdco, you just have a family trust, or is it one or the other?
It's typically both.
Okay.
Now, a family trust can result in other things. Like, for example, if your grandmother had like a piece of land and passed away, her that holding in the land now turns into a trust. So you may
Mm-hmm.
hear that term as well. But in the sense of strictly corporate tax planning, usually the structure is operating company, holding company, family trust, corporate beneficiary. And I know that sounds completely over the heads of everybody that's listening right now, but
Yeah.
we're we're talking about a very advanced tax strategy,
Yeah.
and that is for deep down the line, in my opinion.
Okay. Okay. What are some reasons someone would choose a holdco over a trust or a trust over a holdco?
Okay, um, so I think in the terms of corporate tax planning,
Hmm.
if we're at that stage where we are introducing a trust, then you're
Hmm.
typically close to an exit. And what I mean by an exit is your operating company is close to selling, or we're realizing
Mm.
some capital gain of some matter. And the reason for that is because we're allowed to divide this capital gain amongst the trust's beneficiaries. So that's when I would say the main, I guess, criteria of introducing a family trust comes into play when we have that sort of capital gain trigger that comes into effect. When we're just
Hmm.
dealing with like the growth mode, where your operating company is generating profits and you're not thinking of selling that business for 20 years because we're in our early 30s maybe, and
Mm.
we have a long runway left. You don't
Hmm.
necessarily want to have a family trust, or you may not even have a family to put in a trust at that stage. So
Hmm.
you wouldn't introduce a family trust at that point.
Okay. So it sounds like people usually start with holdcos early on, like earlier on, like in their business journey, and then the family trust is for later when they're about to exit.
That's usually the case. Or if you know that, like, if you're like in, let's say, if we're talking to some VCs out there that are in hyper growth stages, because we all know that in the world we live in today, you could create $1 billion company uh from in 10 years time, maybe even faster these days. So
Yeah.
if you do have that, where you expect that from the onset, which very few listeners probably have that situation, but there might be the one or two out there that do. If
Hmm.
you are expecting a very quick rise in net worth, then it is worthwhile to have a family trust set up initially. But I would say for the 99.9% of people out there in a small business, it is something that you would do down the road, when you're close to your exit.
Okay. Is there a difference when you're holding, real estate specifically as an asset in the holdco versus like a family trust? Just the reason why I bring this up is because real estate is like a hot topic here in Canada. So a lot of people will definitely, ask this question. So I'm just trying to be more preemptive. Is there actually a difference in terms of the way that you're taxed or anything like that?
Yes, absolutely. So if you hold a piece of real estate in an opera or in a holdco, your tax, and let's say for this case, it is not, you don't own an office of your operating company. You just own an investment property, like a piece of residential real estate or maybe commercial real estate, and it's strictly investment income. The tax rate on that income is 50%. Then
Mhm.
after, you have to distribute some funds to get a lower. I think I mentioned earlier that at the end of the day, it's about a 27% tax rate. But there's
Yeah.
steps involved to get to that point. So basically that's the tax rate, but you can retain income like you have that option if you want to. You can retain income in the hold co without paying it out, and eventually, if you do pay it out later, you'll get that refund back. With a family trust, if you have, let's say, an asset that's generating income, you never want to retain that income in the trust because you don't have this accumulating tax savings balance that you can tap into like you do with a corporation. You want to
Mhm.
distribute that money every single year to the beneficiaries. So what that means, if I'm comparing the two, with the corporation, if we're earning investment income in a real estate, you have the option to keep that money in the company. It may cost you a little bit more upfront, but you'll get that money down the road when you decide to pay out a dividend. With a trust, if you have, let's say, 4 members of your trust and that trust owns a piece of real estate, you want to distribute that
Mhm.
money every single year to those beneficiaries. And actually, almost an added layer of complexity, which I don't even know
Mhm.
if we want to get into today or not, is
Mhm.
income attribution rules. And what
Oh, yes.
and basically, to give everybody a very, very short and basic explanation of what that is, if you are paying out investment income like interest or rental income to beneficiaries that are under a certain age in Canada, and they haven't contributed to that investment, because let's say the father bought a piece of real estate in this trust and is looking to divide the income amongst his family members. um, that income that gets passed to the children will get attributed back to the father, so it doesn't even necessarily result in dividing the annual rental income. The only income that you can divide is the capital gain when the property is sold down the road.
Oh, that's actually like a really, really good tip. It's good to know.
Yeah, it's pretty complex. So I don't expect, like, obviously anybody that's listening that has a certain situation, you should
Yeah.
definitely reach out to us and look at it as a individual matter than getting advice from this podcast, that's for sure. But
Yeah.
it's just
This is
just a
just
very high
general.
level.
Yeah, general like information, and then if they want, tailored information to their specific situation, then they have to contact you, Michael, so you can
Or
help
you
them.
too, Ariel. Don't get yourself off the hook.
Okay. So just one question about this. In terms of investment income, let's say in the
Mhm.
hold co, how does that affect the small business deduction? Does it affect it at all, or the small business deduction is not affected by the type of income, if it's like investment income or like active business income?
Okay, that's an absolutely amazing question. So
Hmm.
you're right. The CRA changed the rules recently. Before, a corporate group, which I know sounds unfair to anybody that's just starting in the corporate game of life, but basically and I forget the exact year, but I want to say it was something like 5 or 6 years ago now. Um, the CRA introduced a bill that basically affected your corporation's small business deduction, and that basically gets you to that 11% tax rate that I was referring to earlier. Um,
Hmm.
if your company earns $50,000 of investment income, and it's, let's say, I know maybe that sounds a lot to some people, but if you have,
Hmm.
let's say, $1 million in cash that's sitting in a
Hmm.
GIC at today's interest rates,
Hmm.
that's pretty much $50,000 right there. So
Yeah.
effectively, if you have $1 million of cash or real estate that is earning what it should be earning at today's dollars, chances are your small business deduction rate is coming into or maybe penalized, I should put it that way. And basically how it
Okay.
works is any dollar between 50,000 and 100,000 or $150,000, it slowly grinds down your tax or your tax savings on that small business deduction. So up to 150,000, if you earn $150,000 of passive investment income, you
Mm-hmm.
basically lose every tax savings on your small business deduction, and you're paying the
Wow.
yes, which is it's a painful thing. And it can happen even in 1 year. That's what some people
Mm-hmm.
don't realize. Let's say, for example, your investments aren't earning that much. You own a house
Mm-hmm.
that has grown over 10 years' time, and you decide to sell that house in your company, and it generates a capital gain of 200 or $300,000. That is where you've triggered a passive investment income of greater than 150,000, and all of a sudden you lose your tax savings in your operating company. So absolutely it affects your small business deduction holding investments.
Okay. So when you lose the small business deduction because you have had the investment income, do you lose it forever or just for the year that you maxed it out?
Amazing. So that is a great point. You don't lose it forever. You only lose it for that 1 year. There are other areas where you can potentially lose it, and it's more long lasting. And that's if your corporate group has assets of over $10 million. And there's a deep calculation in all this. And I know we're only talking to the very few that have managed
Mm-hmm.
to get to that point, but that is another area where
Mm-hmm.
you could potentially lose your small business deduction.
Mm-hmm.
Again, at that point too, I think you're probably okay to pay a little bit more in tax because
Yeah.
you've managed to grow your business successfully and you have some
Mm-hmm.
wealth in your name. But in this certain scenario where your passive income is over that $50,000 threshold, you only
Mm-hmm.
lose it for the 1 year.
Awesome. So here's something that maybe a lot of people in TikTok will disagree with us, right? Because I
Okay,
don't know
let's
if you've
hear
seen
it.
all these videos. They say that rental income is passive income, right? They say, "Oh, buy this house, 5% down payment and then, rent it out and then you will have passive income as a landlord." Is rental income passive income in the eyes of the CRA, or like tax wise? Is it passive income or is that active business income?
So you're opening a whole can of worms on this area. I don't know if you did it on purpose or not, but but I
It's
mean,
not on
I
purpose.
I think in the very basics of this, and if we're just talking about, let's say you have a holding company that owns one
Hmm.
rental property, the rental
Exactly.
property is not it's not where your operating company operates out of. I use the example of
Hmm.
the butcher owning a commercial unit that the butcher operates out of. I'm
Hmm.
not talking about that situation. I'm talking about
Hmm.
a corporation that just owns a residential house and rents it out to some, non-arm's length, non-related people and earns some money on that.
Exactly. Hmm.
That is
Exactly.
considered passive income in the eyes of the CRA. In the eyes of
Awesome.
TikTok, I don't
Yeah.
think I think people throw out the term passive income very lightly. Um,
Yeah.
I I don't think it's, I know what they're trying to do, where they're trying to get everybody
Hmm.
levered up, take out $1 million loan and
Yeah.
go live on a beach somewhere and just earn $50,000. I
Yeah.
wouldn't advise that to anybody. Go talk to an investment advisor for those kind of decisions. Don't listen to TikTok on that. But but in terms of just the CRA is what we're talking about,
Hmm.
that would
Yeah.
be considered passive income, yes.
Okay.
And actually, just to like further that too, it doesn't necessarily mean how much rental income. So like if you have a house and your rental income is, let's say, $50,000, but that's just
Hmm.
your top line revenue. You're renting it out at $4,100 a month or $4,200 a month gets you to the 50,000 bucks.
Hmm.
Um, That is not what I'm talking about. I'm talking about it has to be profit. So if you own the house that generates
Mm-hmm.
50,000 in sales, but you have a mortgage that has interest, you have property taxes, you have maintenance, you have all these
Mm-hmm.
expenses to run that house, your
Mm-hmm.
income is lower than 50. I'm not talking about revenue, I'm talking about
Yeah,
income.
yeah. Oh, okay. And because it's considered passive, then it will kind of affect the small business deduction.
Yes. And
Got it.
there's certain ways to change passive income to active income. I don't know if you really want to get into that right
Mm-hmm.
now, but I would say
Okay.
ask your accountant. There are certain rules that the CRA has how you
Mm-hmm.
can, even if there are corporations out there that just own investment
Mm-hmm.
properties, but they've
Mm-hmm.
managed to turn that into an active business for certain
Mm-hmm.
ways. And it requires employees. There's a few tests involved. I would say speak to an
Mm-hmm.
accountant on that.
Mm-hmm.
But just in the very high level of this podcast, if you're only owning one property that earns $50,000 a year in net
Mm-hmm.
income, then you're putting your small business deduction at risk for sure.
Okay. Perfect. Thank you so much for that, Michael. I know we've spent an hour together, but before we end our discussion on holdcos, are there any no-nos or you absolutely must not do it with the holdco that you could at least, help our listeners with to avoid the largest mistake they can do with the holdco? What is it and what should they not hold inside the holdco?
Okay, well, that's a great question. And I've seen a lot of bad investments in a holdco. I won't get into them all, but if I were to leave the listeners with at least one tidbit of advice of what not to hold, and I get this a lot from clients of mine, is they want to hold, let's say, a residence that they plan on living on or that their kid wants to live in, or let's say maybe a family cottage that they're going to use and never rent out. Those are investments that I would not hold in my holding company. And the reason being is the CRA will attribute some form of a shareholder benefit. And you get into these shareholder benefit laws that can really be negative to the shareholder of that holding company. So I would completely advise against owning any real estate that you plan on using personally as your main residence or a vacation property that you're not going to rent out. You want to keep those outside of your holding companies.
Mhm. Awesome. Thank you so much, Michael, for today. It's been an amazing hour with you. I've certainly learned a lot, and hopefully, all the listeners did too. So, if there is any topic that you guys would like, Michael to come back and discuss, because he's the expert here when it comes to these types of more complicated accounting structures. There's anything you guys want Michael to come back to our YouTube channel for and discuss, please don't hesitate to comment them down below and we will try our best to cover them as well. And if you guys have any questions related to holdcos, please do not hesitate to reach out to Michael. And I will have his details on the screen right now. And then if Michael, you could just tell people your website, social media, things like that, how they can contact you.
Thank you, Ariel. It's been a pleasure being on the show with you today. I hope we get to do it again soon. And basically, I am an old head where I do not have any social media yet, but Ariel is teaching me the ways. Um, you can contact me. The best way to contact me is by following me on LinkedIn, searching up Michael Scarcello at SMP LLP, or you can email me at mscarcello at smpllp.com, and I will happily respond to any requests that I get.
Perfect. Again, thank you so much for your time, Michael. We really appreciate you coming over today, and we look forward to having another joint session with you soon.
Amazing. Thank you, Ariel.
Hey guys, it's Ariel here from Fix My Books. Thank you guys so much for watching this video and helping my YouTube channel grow. If there are any videos you want to see on my channel, please don't hesitate to comment them down below. I always listen to your feedback. And once again, this is Ariel from Fix My Books, helping you fix your books.